Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. Stocks edge low with the market at the day's low. Midcaps fare worse. Pharma holds firm even as the other sectors fall hard.
Mahindra Finance slumps after RBI asks it to stop using recovery agents following the tragic Hazaribagh incident. The company says it does not expect this order to impact its collections.
Midcap pharma names like IOL Chemicals and RPG Life gain as news drives the moves. Defensive sector shows resilience in a weak market. IOL Chemicals board clears a $2 million investment in multinational US pharma.
All right, those are the headlines that we are tracking on Midcap Radar. As far as the markets are concerned, it's a good day for the bears, actually. Nifty has fallen sharply from the opening levels as well. It is at the day's low, a 230-point cut out there. And it's the Bank Nifty which is leading those losses, so 2.5% gone there as well. All the sectoral indices, barring Nifty Pharma, they are in the red today. And Nifty PSU Bank, that is the one that is taking to its chin. It's down 3.5%. Sector-specific moves, of course, stock-specific, that is. But overall, it's very bearish in terms of sentiment as far as our own markets are concerned. Finally, Reema, we are seeing some corrections, something that we had not been seeing for a long time.
I know we had gotten away with limited cuts, despite the weakness that was taking place in the global markets. But today, of course, we have seen a pretty big fall, 1.3% down on the Nifty. And we've also broken this week's low. The low this week on the Nifty is 17,429. And right now, as we speak, we're trading below that level. And banks are down, I think, close to about
5.5% from the highs.
From the highs, but
yes.
for the week as well,
the
banking index is down close to about 3 to 4% for this week itself. But let's get to our Midcap Movers segment. We've got Vivek joining in. He's standing by to tell us all about the midcaps and small caps moving around in trade.
Well, when you're talking about, the entire mid-cap and the small-cap space today, you're seeing quite a bit of cuts, but select stocks, of course, on the back of news flows or other corporate developments continue to buzz. First on the list is Apcotex Industries. We don't talk about this stock too much, but the company that is present in the manufacturing of synthetic latex and in the rubber segment on the back of easing of raw material costs, continues to see some up move in today's trading session. The other stock on the radar is Ruby Mills. Remember, the company, tweaked the corporate development as well as the record date for the bonus issue. And on the back of that, you're seeing some buying ahead by market participants. Sterling and Wilson Solar continues its up move. We highlighted it yesterday as well. In this particular week, the stock has gained over 20%. Next on our list, IOL Chemical. We alluded to it at the start of the show. And on the back of this particular interesting acquisition that the company has made, the stock continues to gain. JM Financial, again, this particular week has gained almost over 12. And today it's again buzzing on quite strong volumes. We're also talking about Copra, and remember the pharma company. This particular stock actually had quite a bad session in terms of the entire week, but today, after hitting a 52-week low yesterday, today has bounced back quite smartly on sharp volumes. On the other hand, when you're talking about some of the losers, Thermax, the stock on the back of the fact that the Capex theme revival actually led a lot of these capital good companies to 52-week high. Today it has corrected quite sharply on back of profit booking. Similarly, TD Power 2, again this particular stock, it's down almost 15% in the last 7 trading sessions. Root Mobile down 10% in the last 2 weeks, and when you're talking about Ricoh 2, today falling quite sharply on strong volumes.
Okay, all right, Vivek, thanks a lot for that. So even in a bad market, we do have some of the gainers in the broader markets as well. It's time to get a technical check on the markets now. Let's welcome Hemeen Kapadia of KR Choksey Securities, who is with us every Friday. Hemeen, good afternoon. Thanks a lot for joining us. Ending the week so far, so to say, on a weakish note as far as our own markets are concerned. What are the charts suggesting now?
Okay, good afternoon to you, Sonal. Thank you for having me. Like you mentioned in the beginning of the show, the correction was not coming, much needed, overdue, elusive, and finally happening. We've had a 2,800-point move, Sonal. So frankly speaking, we should have been sub 17,000 now. I guess the Bank Nifty outperformance sort of evened things out, and we led to this almost irritating obstinacy for the market not to go down. Okay, we walked into correction. There's a 6th week that we are in a corrective phase. The VIX is 20, hasn't gone up that much. I think the Bank Nifty is now going to correct a bit more. That's what it looks like. IT and metals could be dark horses. Honestly speaking, yeah, The earlier swing low was 17,166 on. We could be testing that. And beyond that, I'm not sure if there's too much of a downside. The correction is there, and we would require a normal time and price retracement. What we're going through, but stock specific, there still seem to be pockets which look tradable, buyable, or sellable. So.
You said that, Nifty should have actually been below that 17,000 mark. On the Nifty, what are the levels, and do you see us going well below 17,000?
Rima, if we look at levels, 17,430 was support. We're breaching that today. We close below that. We see 17,226, and we close below 17,226. We get 17,055. I don't see it going too much beyond 17, honestly. See, while going up, there were 6 gaps, Rima. We covered up 2, 4 were remaining. And we've had some intra-range gaps in the last 6 weeks, which are not relevant. And the last important gap I'm talking to you about is 17,000 between 17018 and 16947. So this is a possibility. To just round it up succinctly, below 17.2, we might just go to 16.9, and if we don't break 17.2 decisively, we sort of consolidate some more.
Okay, all right, Himin, thanks a lot for joining us. But tell us about your stock picks as well.
Yeah, I mean, a bunch of stocks which are qualifying as contra-buys. Everything has come off a bit, but I have a few stocks which look significantly resilient. One is a buy call on Metropolis Healthcare, oversold, downside limited. We have the mechanical indicators on the daily as well as the weekly chart giving crossover buys, indicating a bounce. So buy on Metropolis Health at 1465, stop loss 1415, target of 15565. Secondly, a buy call on Ipca Labs, almost a similar story. Buy at 875, stop loss 850, target 925. And a contra call on Ultratech Cement. I believe we are oversold. We are set for a turnaround, and we are close to strong supports. So buy Ultratech at 6200, stop loss 6000, target 6600.
Thank you very much for that. Need to slip into a very short break. On the other side, we'll invite the management of Shriram Properties to discuss the company's expansion plans. Stay tuned.
Hi, welcome back. Well, as promised, let's go to the management of Shriram Properties. We have a lot of factors in play, rising interest rates, but the real estate sector seems to be doing well with strong demand trends. But we'll speak to Shriram Properties to understand the expansion plans and pricing scenario as well. We have the Managing Director, Murli Malayappan, to discuss the outlook going forward as well. So good afternoon. Thanks a lot for joining us. I wanted to understand your product pipeline, the launch that you're planning this year. 12 likely launches in FY23, but Q1 was muted in terms of launches. Around 1 or 2 is what you did. Will you be able to keep up with the pace of your guidance as far as launches are concerned? And what is the targeted area in terms of launches? Will it be, say, via a joint development? Will it be a JV? What is the development mode?
We have planned about 11 projects this year, and we have done only 1 in Q1. On Q2, there are a couple of more projects lined up. And Q3, as you know, that this festival season is catching up in India now. After 3 years, India is getting into big festive mood. So we are also aligning to that festivity, what we are looking at now. So quite a lot of projects are lined up, and also good number of offers are being lined up for Q3. We should be able to meet our projections, whatever we have given, guideline we have given, we should be able to do that. And market is looking very positive. We are extremely bullish on the market.
You said 11 projects or 12 projects to be launched this year?
11. Out
11.
of which one is already launched.
Okay.
Yeah.
Okay, got it.
And can you tell us how many are going to be launched in Q2, Q3 and Q4? Can you give us the breakup?
Q2 about 2 projects, and Q3 we should be able to do about 6 projects. So by end of Q3 we would have done out of 11, 9 projects would have launched.
No, 1 done, then 2 more in Q2. That takes us to 3 and plus 6 then. And then in Q4 you'll have 2 more. And when you said you will maintain the targets that you had told us earlier, you mean a volume target of 4.6 million square feet and collections of 1,700 for this year?
Yeah, that is on track now as on date. That is on track. So we don't see any major macro issue at this point of time. Hence, that should happen as per our timeline, what we are planning now.
Okay. And this volume growth that you're expecting at 4.6 million square feet with collections rising, in terms of pricing as well, will you see a growth? So that value growth that will come in for you, how much of it will come from pricing as well? Are you able to push more prices after what you saw in second half of FY22 and Q1 as well?
Yeah, as I have been maintaining that price increase is inevitable. We expect the price increase to happen substantially. I expect the price to go up at least another 5 to 8% in the next 6 months' time. So price increase is becoming inevitable due to several factors. As I keep maintaining, it's a consolidation is one factor which is driving us very, very aggressive. So price will increase will happen. Already we increased some of the projects' prices now, and we'll further increase the prices during this H2.
You said there'll be lucrative, attractive offers for customers during Diwali. So how does that tie in with the planned price increase?
Yeah. So, I mean, as I said, after 3 years, this is the first time, India getting into big festive mode. And we have already started witnessing a lot of interest from the prospective customers. Hence, we are also rolling out quite a lot. In fact, some of the projects were lined up to synchronize with the festival season. That's also one reason we pushed for Q3. So we are coming out with some attractive offers for Q3 with price increase is what we are looking at now. So price increase is becoming inevitable, and we will. I'm very positive about price increase.
Okay, but you're sensitive about the price increase. There will be some offers, but because of the inevitability of price increases, they'll go through, is what you're saying, despite the discounts that you're talking about.
Yeah, no, there's no discounts. It's a festival offer. It's a packaging.
Oh,
basically, some people are doing, 25, 75, some 20, 70, 10, this kind of offer. But as price increase happens, it's not a discount.
Oh,
we all
God.
love discounts and offers, right?
Festive season and offers is something that goes together. I wanted to understand cash flows as well, because in real estate sector, that is one way to understand the health of the company as well. I was looking at your investor presentation, the estimated receipts from unsold units around 2,600 crore rupees, collection spending from sold units around 3,000 crore rupees. By what is the annual free cash flow that you can generate? You did say 1,700 crore rupees is the collection in FY23. What is the free cash flow expected, say, over the next 2 to 3 years?
The collection, as I said, it is going as per the plan now. Every month on month, we have been, clogging about 100 crores plus. And during Q3, Q4, it will increase. So collection is happening now. Free cash flow, we should be able to generate close to about 250 to 300 crores during this financial year. That is also on track today. So we are also aggressively looking at new projects as we go on.
You said that consolidation is taking place. Have you been able to acquire any projects which were under financial stress, duress, any builders that you've acquired? And if you could tell us a little bit more on that.
Plenty of projects in pipeline. In fact, we have closed some projects with some of the NBFCs, and we have launched. As we speak, we just concluded one project with a small developer in Bangalore. And a couple of other projects we actually taken over from other smaller developers and launched. One in Chennai, we are in discussions now. We should get closed. So plenty of opportunities are there because of the consolidation on all the smaller developers who could not deliver. So they are all folding into it, either through NCLT or ARC or the NBFC model. As you know that we have lined up quite a lot of projects, and more than about 35% of the projects are in the development management. Yeah. And mostly, it's from other developers who are stuck or who have not been able to do it.
Okay. So that is about working with smaller developers. Having said whatever we discussed, what is the outlook on debt? Because you will be generating free cash flows of around 250 to 300 crore rupees. Your current net debt in the quarter gone by was around 364 crore rupees. What is the plan by the end of the year? And will your share of debt coming in from NBFCs, that is around 50%, it's higher on that side, will that continue?
No, that NBFC portion is already started coming down now. So we already replaced some of the NBFCs with public sector banks, and that will come down drastically. Overall, net debt position is likely to come down further by end of the fiscal FY23.
Okay. All right, Mr. Malayappan, thanks a lot for joining us and taking us through all the details. So that's the word coming in from Shriram Properties. Demand remains strong. They are expecting volumes of 4.6 million square feet in this year itself, with free cash flows of around 250 to 300 crore rupees. The stock, however, considering the market moves as well, is down 2%, but is off 25% from the 52-week high as well. With that, we'll slip into a break now, but here's some great news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets.
Welcome back. Let's talk about a whole host of pharma stocks. They're in the news today. Ekta is joining us to tell us all about them. Ekta.
Thanks for that. Well, I'll start with Cipla, which is in focus. That is because their Indore facility has received an establishment inspection report from the US FDA indicating closure of the inspection of their Indore facility. So that particular stock would probably see some upside on account of that. It's a positive development. Glenmark, that stock, is in focus because their Buddy plant is still categorized or is as an official action indicated status, which is a negative. Remember that it had received an OAI status in 2019, a warning letter as well, which continues to remain on the particular facility. But the Aurangabad facility has received an EIR, so that's a positive for Glenmark. Shilpa Medicare, one of their facilities, which is basically used for testing, it's a lab testing facility, has received the go-ahead from the US FDA and EIR from that for testing samples when it comes to regulated markets. So that's a positive for them. And I just want to point out that Biocon has been in focus because we've managed to access the Form 483 issued to both the Malaysia as well as the Bangalore facilities. And it seems as though for the Bangalore facility, which had received 11 observations, it might be a road which could be a little tougher for Biocon in terms of resolution of those observations. And lastly, just want to point out that Torrent would be in focus because their Indrad facility is currently getting inspected, and that was issued a warning letter in 2019.
A trading day is not complete, Ekta, without any pharma stocks being in focus, and it is the sole index as well, which is in the green today. Thanks a lot for all those stocks which are in focus today. Moving on to our special segment, Midcap Spotlight, Vaishta will focus on Schneider Electric. That is the stock which is up in a very weak market. What is happening here, Vaishta?
Hi, Sonal. Thanks for that. Well, you're right in saying Schneider Electric Infra has been in focus. In fact, not just today, but it's probably over a period of, say, about 2 weeks. And this is in a weak market where the Nifty has probably been more or less flat in the past 1 month, while this company has been rallying by nearly 50% in the past 1 month. In fact, today the stock is near its 52-week high. And this movement is largely linked to the 7th September announcement, which is approximately 2 weeks back, on enhancing the production capacity. So on the 8th of September, the turnover was as high as 229 crores, while even yesterday the turnover, though was lower, but though was also high at 66 crores. So what exactly was the announcement? On the 7th of September, the company has said that they have approved enhancing the production capacity of vacuum interrupters and vacuum circuit breakers by setting up a manufacturing unit in Kolkata. Now, the existing capacity of the company is at 80,000 MV vacuum interrupters with an existing capacity utilization of 90%. So this capacity will be increased by 180,000 MV vacuum interrupters and MV vacuum circuit breakers assembly lines. Now, this will require an outlay of approximately 138 crores, which is to be incurred over a period of the next 3 years. Now, the rationale behind expansion is to meet the domestic demand as well as increase the export to Schneider Electric global entities to accelerate their Atmanirbhar Bharat initiative of the government. Now, this expansion has the potential to increase the revenues of the company multifold, and hence the street is excited about this news. The FY22 revenues were at approximately 1,500 crores.
Okay, thank you very much for that. That's a snapshot of Schneider Electric. By the way, for the markets, the grind lower continues. Now we're down 250 points in the Nifty. It's 17,374. The Sensex, as we pointed out, has already turned negative on a year-to-date basis, while the Nifty is just holding on by 0.12%. The Sensex has already turned year-to-date negative. The Nifty is holding up by a slim margin, just a couple of points, while the Midcap index is still up close to about 2.5%. So this is turning out to be a very weak Friday for our own markets. Wrap up on Midcap Radar from the entire team. Thank you for watching. Your stocks when we return.